So let's first talk about what is a quality management and why do we need, or what is the importance of quality management or high quality work. So firstly, what is an quality management? See, when you look at the audits that has happened over the period of time or in the past, there has been a lot of deficiencies that have been reported. There have been cases where significant deficiencies were not identified, because of which auditors have been fined, penalty came in. After corporate governance specifically, auditors are under big time scrutiny by, of course, our own FRC, the Financial Reporting Council, who are looking at the auditors and checking whether they are doing the work as per the required standard. Now, when does the audit, can you say that the audit is of not high quality? Audits are not of high quality when the auditors are not doing their duty as required by the standards. So we learned in AA that there are various standards. Even in AAA, we are going to learn various standards. The standards that define how an audit should be conducted. They give specific guidance what we should do, how we should do, what are the procedures we need to undertake, what are the evidences we need to ask, all those things. If we don't do that diligently, then the quality of the audit is compromised. Let us say, for example, let us say a very good example, that there was an expense line called as miscellaneous expenses. Now, technically, when such expense line is seen, auditor will have a tendency to ask question, what are these expenses of? If the auditor did not, answer all the questions in relation to the miscellaneous expenses, and he did not ask enough evidences for these miscellaneous expenses, then the quality is compromised. Another example is the evidences he audited. He got a lot of internal evidence, but he forgot to ask external evidences. Quality is compromised. Materiality. He did not follow the process when he is establishing the materiality. He did not, do a lot of procedures to confirm a balance. Rather, he did few evidences, few samples he took, and that's it. He confirmed based on previous judgments. But for certain kind of risky accounts, they have to do additional procedures, but he did not do it. All of those will lead to quality issues. A transaction and an evidence are not matching, but he ignored it. It's an example of a quality. Now, that's what is a quality management. To ensure that the auditor firstly does his job cleanly, second, he does it rightly by looking at the relevant standards, a quality management is important. Because ultimately, the audit report goes to the shareholders who depends upon the auditor to take a decision. Now, why? Why it is required? There are various reasons why the audit quality is very important for an audit process. Firstly, to achieve the objectives. Right? What is your objective? To give a report. And to ensure that you are giving a reasonable assurance. Firstly, that's your objective. So that objective is what's your first requirement to achieve the quality. To operate efficiently, effectively, and economically. There could be cases where we are doing more procedures for an account which is not that risky, but less procedures for an account which is highly risky. So it is not running effectively. We will not have a quality audit. Why? Because for accounts which are not risky, we are doing more procedures, we are wasting time. And for accounts which are less risky, we are not doing enough procedures, we are not spending enough time to identify the transactions. So they definitely would be wasting of time. So economy, efficiency, and effectiveness. That's what the requirement of a quality is. To avoid disputes with the clients and minimize the risk of litigation. Like this will help you to ensure that the clients do not raise disputes. The shareholders do not say, you didn't do the work properly. You can say, boss, I have done all the work as per the standards that's required. To ensure that the FRC does not raise us concerns. Smooth functioning of the FRC regulatory body. To ensure the staff are monitored and controlled and performing the work appropriately. If they are not doing it, whether the training is required or not, to check that. To ensure that the appraisal system operate effectively. To provide assurance that the audit process to the stakeholders are appropriate and clean. Also, all of these are the requirements of why an audit should be conducted with high quality. So now let's learn what are the elements that could affect the quality of audit quality of the engagement firm and the national level. What are the elements of the framework that is established by IASB? So IASB developed a framework which describes various elements with respect to the audit quality. Let's look at it. So the three factors that affects the audit quality are inputs, process, and the outputs. Input factors are the values, ethics, and attitude of the auditors that are influenced by the culture of the audit firm, regulators, oversight bodies. Like that would affect the audit quality themselves. To give you an example, if there is a partner who scrutinizes the manager very well, like he checks each and everything the manager does, he's gonna check all the work that he has done. So what happens? The manager will ensure that his quality is of high category, right? So if there is someone who is checking in a deeper way for the manager, then definitely his quality will be very high. So similarly, regulatory bodies. So until and unless FRC came in, auditors were having a honeymoon period. They were not focusing on the quality. They just want to ensure they support the client and finish off the quality. But after corporate governance, after FRC have become scrutinized so much, auditors have started implementing the quality management process. When the IASB came up with all audit quality, standards, the auditors implemented that in their process. So input factors are the values, ethics, and attitudes of the auditors themselves, which will factor in or affect the audit quality. If there is a auditor who says that I don't care of the quality, I just care of the client, then definitely the work that he's going to do will be of low quality. Definitely, second aspect is the knowledge, skills, and experience. If an auditor is a new auditor, he is like very less experienced, definitely the work he will be doing and someone who has 10 years or 12 years of experience, definitely the experience will differ, right? Qualification. Has he gone through any professional qualification? If not, definitely the quality will be very less. So that's all in the input process or the input factors. Now, what are the process related items? So process related items talks about the process the auditor follow to comply with the laws and regulations and applicable standards. So whether he has inculcated or implemented certain processes which are required by the laws and regulations to ensure the audit are of high quality. That is called as a process. Like on what basis or on which process he is following to ensure the audit is running smoothly. The third one is outputs. Output is the reports that comes out from the auditor, the factors that comes out after his input and out process. What is the output that he gets? Example, the reports, management letter, financial statements, audit reports, all are of clean category. They are called as the outputs of the audit quality. So the reports, the management letter, in fact the financial statement should be of the prime and most clear quality that he should emit. That's called as outputs. Then there are something that's called as interactions. So auditor will have interactions with various people or various stakeholders that could affect the audit quality. For example, interactions with those charged with governance, interactions with regulators, interactions with users, interactions with the management that could affect the audit quality. To give you an example, there is a client, there is a, management. The management is very strict and the management is pressing on the auditor very heavily. They are pressurizing the auditor to give the report very fast. So because of that pressurization, he might not be able to fulfill the audit quality with high standards. So that could affect his quality. Stakeholders, shareholders, users, they are not bothered at all. So definitely he will be lacking. Like if the shareholders are not bothered what report he is getting and nothing they are worried about, the auditor will not worry about it much. He will give whatever the quality he can and then he will finish it off as early as possible. Then regulators, right? Regulators. FRC regulators who are implementing this audit quality process, they are actually the biggest ones. Right? If they are not doing the work cleanly, if the auditors are not doing the work cleanly, then definitely the regulator can press it. But if regulators are not even bothered, then audit quality will be compromised, etc. And the last and then not the least one is called as the contextual factors. Factors that affect the nature and quality of the financial reporting, either directly or indirectly. Right? So to give you an example, the applicable framework, laws and regulations that is coming in, the corporate governance factors which could affect which are the external factors that could affect the audit quality. If a new standard comes in, then definitely it will improve the audit quality, right? So that's what is called as contextual factors. This is not examinable, by the way, but it's very important as a starting point, which will help you to understand the audit quality, where it is coming from. So this framework is established specifically for 3 category of people. One is at an audit engagement level. For each and every engagement, the audit quality management framework have to be established. At the firm level, overall firm should have a culture and conduct to ensure that, the quality will be of higher category. Like the tone should be set at the top. They should have a proper monitoring systems. They should have proper reward systems. They should have proper review systems enabled at the firm level, which ensures that the quality are of high category. Proper training. To give you an example, any employee comes in, a rigorous training have to be taken into consideration, which will focus on his audit quality. National level, right? That's done at a national level. For example, that is applying to all the auditors of the country. To give you an example, the international standards of audit. It is applying to all the auditors who are following in a specific region. So definitely all of them have to perform the audit with this particular minimum quality. Only then they will be considered as a quality auditor and they will not be penalized. FRC implementing certain quality management processes, which is required by the auditors in UK to follow that. Otherwise, they will get penalized. So that's at a national level. So every quality have to be applied at an engagement level, at the firm level, which are be of higher category, and national level, which is required for all the auditors, irrespective of whether they are, in separate firms. The quality management that we are going to learn in this particular chapter are of 3 categories. The standards. One is ISQM1. Majorly, we are going to learn this, which is the quality management that is required for firms who are performing an audit, review of financial statement, or any other assurance related engagements. ISQM2, which is the engagement quality reviews, which are part of the ISQM1. So ISQM2 are engagement quality reviews. Engagement quality reviews are the reviews that the firm should be implementing to ensure before they send out the report or after they send out the report, what are the quality reviews that they have established to ensure that their work is of higher quality. And it has a relation which is within part of the ISQM1. ISA 220 specifically talks about the quality management for audit of financial statement. ISQM1 and ISQM2 is for all the engagements, not just audit engagements, audit of financial statements, but other assurance engagements as well. ISA 220 is specific quality process requirement for audit of financial statements.